Welcome to the Marketecture podcast. This is episode 6. We have a special guest today. So in addition to Eric Franchi from AperiamVentures, we have Ciarán O'Kane, the partner of FirstParty Capital and the founder and CSO of ExchangeWire. Ciarán, thank you for being here.
Hello, Ari. Very excited to be on your podcast. Thank you for an invite.
Calling in from London?
Yes, calling in from London, from Hatton Garden, Farringdon, which is basically the beating heart of European ad tech. Basically, there's only ad tech and Jewish jewelers on this street, which is an interesting mix.
Yes, I've been to that. I've been to your office, and I think you had me interviewed, but didn't warn me about the 5-floor walk up to get to the.
Oh no! We've moved since, Ari. We've moved down the street, so there's only one flight of stairs. So you're welcome to come back anytime. You won't have to walk up 4 flights of stairs this next time.
All right. At my age, you have to triage these media opportunities by the amount of stairs. So probably most of our listeners have met you, have been to your conferences, have heard you speak. Some people have called me an ad tech gadfly, but I think you're more of an ad tech gadfly than me. You have opinions. You are very involved in European ad tech, and now you have a venture capital firm, FirstParty Capital, that's investing primarily in European ad tech. Correct me if I'm wrong. So why should people in ad tech care about European ad tech?
Well, it's a good question, Ari. And by the way, this is my first time on a US podcast in 15 years. So 20 years doing this.
No way.
Yeah, absolutely. The Americans just are afraid of me, I think. I feel like Bono here, and you too, like the Joshua Tree, breaking the United States finally. But
that's a great analogy.
Thanks for the lovely intro, Ari. I suppose we could rewind a little bit. Like, when we started ExchangeWire back in 2007, it was very much US focused. We were focusing on the programmatic space here and in APAC. It was growing slower than the US market. And I guess over the last 10 years, we've seen sort of new companies come out of Europe, and sporadically, I would say, compared to the US, you did the likes of Criteo, Sticky Ads, Grapeshot, Unruly, Sociomantic. Well, most Sociomantic was mostly European based, and Unruly to extent. So you had kind of sporadic companies coming out of here. So the US was still king. But over the last couple of years, I think we're seeing a sea change. I think a lot of that's got to do with the current privacy landscape and deprecation of IDs and cookies. Ironically, it kind of give companies the ability to scale globally easier. And I think what we're seeing now is sort of like fragmentation of markets. You still have the United States, which is a monolithic media market. It just gobs of money in the market. Like, a typical independent agency would be as big as a holding group in Europe. You think about Horizon, the size of that. But what we have now is sort of a fragmentation in sort of global markets. You've got United States again, the monolithic media market, and you've got sort of Europe as a privacy moat now, which is making it very difficult for any sort of company built or based off or sort of a framework to kind of operate in the market. And there's a bunch of reasons for that. That's mostly kind of down to like the GDPR regulations passed by EU and also sort of like the advent of sort of the privacy advocate. Like there's quite a few of them here in Europe. Johnny Ryan and Max Schremm are well-known figures here and globally for like taking down big behemoths like Facebook and others.
So fragmentation, does that mean that European ad tech is really for the European market? Or is it global companies that are starting in Europe with the advantage of being sort of native to the privacy environment there?
I think there's a couple of things. I mean, typically you had companies sort of being built here to try and get into the US. But I think companies have started to rethink the global space, right? So when you think about US ad tech right now, it is definitely built for US first because it's the easiest market, right? It's their native market, English speaking, and there's a huge media market there, right? So when European companies now, the good ones anywhere, they're kind of being built for fragmentation and they're rethinking how they scale. They're almost sort of building themselves to be resold by others in other markets, sort of plug and play. So that is a very interesting sort of new piece of thinking around mad tech, as I call it, like in the region. So it does give European companies a bit of an edge. And certainly, I think companies building for this part of the world are thinking privacy first and foremost. So they can't depend on the UDID2s and all the rest of coming out. It just won't scale, Ari.
Right.
I keep telling people that here. It's just like I see all these sort of initiatives from the IB Tech Lab. And while I'm a massive fan of like seller-defined audiences, the SDA stuff and contextual plays, I think the IDE stuff is going to fail just basically because of all those problems here.
Yeah, I think this is a bit of a cultural issue too, in that Americans are inherently very optimistic about the future. It's just part of our culture. And so when the cookie goes away, the American reaction is, well, what will replace it? Something will obviously replace it. And the European reaction is more like, nope, nothing's replacing it. It's going to be a mess, and we'll work around that mess.
Well, I think, yeah, it's a bit like that. We're optimistic as well, but, we also kind of pull a page out of Marcus Aurelius' books, with stoicism. We have to embrace what's in front of us and make the best of it, and I don't see that as a pessimistic view. It's natural sort of evolution of the space. I think eventually American companies will have to come around to our thinking, because there will be privacy laws in the US one way or the other.
Right. You'd expect that. So let's just rattle off some of the kind of next generation hot companies that are coming out of Europe. Obviously, MIQ is, a pretty large company at this point with big valuation and exit. They based originally in London, but a big expansion to the US. InfoSum, the clean room company, originally based in London. What are some other ones that we should have top of mind?
For us, we're making a big bet in Lumen. They're a attention-based company. They basically have one of the biggest sort of eye tracking panels in the world, and they merged with Avocet, which Avocet has the sort of ad tech DNA, so it's a tag-based measurement piece. I think that's a huge opportunity and massively scalable. They're signing massive deals all over the world.
Sorry to interrupt. It's just an editorial note, which is they're named after the same company from the TV show Severance, but it has nothing to do with detaching your brain. It's more about ad tech, which would make
it's all about the future of ad tech, Ari. It's about attention. It's not about Severance. They're super interesting. There's companies sort of like in the privacy workflow space. There's retail media. I think that I'm very excited about a bunch of stuff like, CTV outside the US is very different from the US. I mean, ourselves and Eric, we've co-invested in a business called Lightbox TV, which is sort of like an enterprise version of Finecast, aggregating like a fragmented TV inventory, whether it's like CTV or linear or walled garden. That's the way I like the businesses to be built. They're really building for problems in the space. So the other thing that you touched on, Ari, which is super interesting, is private equity is now very, very active in this market. And so obviously MIQ are, one of the great untold ad tech stories. I think $1 billion valuation, Gorman and Lee, big shout out to them. That's an amazing achievement from them. There's a bunch of those companies who've been bought this year. Private equity has been involved in the acquisition of and funding of companies like Captify, TapTap, LoopMe, CTAG, Bliss, and they were all like 100 million plus deals. So, the ad network is getting a lot of play here, but the exciting companies are the ones thinking beyond cookies and IDs, and there's lots of innovation going on in Europe and in APAC for that matter as well.
Yeah, wow. The number of names you just rattled off is coming to mind. We also, in our last episode, talked about ID5, which Eric and I are both personally invested in as well. Let's hand it over to Eric for a second. So as a U.S. investor, how do you think about the opportunities in Europe? Do you think about investing directly in companies based there, or more about, kind of follow on when they're ready to come to the U.S. market?
Traditionally, it was the latter. So we've been investing as a fund now for 5 years. For the first 3.5 years, almost 4 years, we invested in two companies. So ID5 and Zeotap, both under that thesis, right? Like these were, businesses that great proof of concept, ready to scale, wanted to enter into the US. So that was two investments total over the course of, call 3.5, 4 years. Over the course of the past year or so, we've invested in 3 European companies. A, greatly increasing our pace. B, companies that are building, in Europe very, very early. Maybe there's a plan to help, kind of push into the US, maybe not for a little while. And I think that increase is coming from the fact that there's a lot of innovation, to Kieran's point, coming out of Europe right now. Some of it is born out of the, privacy and regulation and environment there. And some of it is just like great teams, great companies with interesting ideas. So we're investing in European startups right now. And, again, with an eye towards eventually, scaling into the US. We've got one working on now that is doing that plan. But we've got companies like Pool, which is spelled with 3 O's, Pool. They're building a sort of lightweight subscription platform for publishers, and it's a great business. And 100% of their customers are European.
One of my favorite things to do when I was traveling more pre-COVID was to go to Mexico and tweet all the incredibly poorly named startups that would have tiny booths there. And I think that may have been more of a German thing than a European thing.
Mostly German, sort of like contra deals, I reckon, rather than actually paid for booths.
Exactly.
Those were great threads, Ari. I missed them.
I miss them too. So I guess that kind of tees up the question, is there one European market or is each country different? I feel like we just rattled off a lot of names and probably 75% of them were based in London.
Yeah. You kind of have to look at an aggregate rather than just one market. When we look at companies right now, it goes back to my original thesis about companies being able to scale via partnerships. So as a fund, we're doing like partnerships globally, like to help resell some of the tech that we have, like in Japan and Southeast Asia. Yeah, like Germany is very different from the UK. UK is very different from Southern Europe. Like they are countries in isolation, but that doesn't stop you being able to build the tech that can be used in those countries by another business. I mean, that's the way I think about fragmentation, and it's a new way to think about building that out. I mean, obviously there's companies building for Eric's viewpoint as well, where you go to you start in the UK or France, you get some traction, and then you raise a bunch of money and get to the US. That's the sort of obvious route. But now we're seeing a different viewpoint as well, and obviously with the ad network piece as well, you can build ad networks in Europe. You can have managed service teams, and you can get an exit. So private equity is definitely buying the ad network. I know we're coming on to that in a minute, but it's a good point to make. But there is a route, because the Europeans are probably the best in the world at building ad networks.
Yeah, I think you could flip that and say maybe European buyers are the worst at asking for transparency.
That could be true as well.
That was quite a statement. As a person who's built an ad network, I feel attacked.
Yeah, it's an attack on you and your good reputation, Eric.
The reputation of so there's this kind of type of ad tech company in Europe that I've run against as a competitor many times, which is like you have in your US company, you have the best ad server in the world, maybe a monopoly ad server, and there are like 10 guys in Paris in an office who build their own, and they're successful selling it to every French publisher. And that's it. That's their whole ambition. They'll never leave France. And the same thing for a lot of like rich media companies in Germany or whatever it is. And they're not really scalable businesses. They're local.
Yeah, but that smells of opportunity to me, Ari. If there was a couple of those businesses all over Europe, that's called a roll up. And that is happening right now. You're getting a lot of that happening at the minute. So that's a good thing, I think.
I mean, they could be very nice businesses. They're small businesses, small.
But
nice
if you join all them together in a roll up, that's happening for certain sectors.
Well, we were on a path talking about business models, so let's just jump into that. Many European tech companies end up with sort of a managed service ad net model more than a tech model. And I'm not sure why that is. I think it's a little bit because of the scale of individual European countries, maybe not supporting the staffing required to have a tech model. But I'm interested in your point of view because you've written about this recently.
Yeah, I got attacked the other day. Well, I call it attack. It was somebody just like ribbing me about being a SaaS fascist. And I'm not really a fascist or a SaaS fascist for that matter. So, yeah, it's the recurring versus occurring argument, right? Managed service is a lot easier to spin up than, as you say, like having pure play SaaS businesses, right? A lot of the agencies in this part of the world would not have the same kind of like profit margins or revenue that the US would have. So it's almost easier to do managed service business. And like, look, it's a dark arts here, really. You know what I mean? A lot of trading deals done, people but there's nothing wrong with that. Like, you can scale that. That can be a very successful business. Like, you've many, many examples I rattled off there from like TapTap to Bliss to CTAG that are ad networks and getting massive valuations on private equity, and they're all growing. They're all making profit. So it's a very different viewpoint. I think the ad networks get a bad rap But once you get outside the US, it just becomes harder to run a tech business because it just is difficult. So that means that like MIQ can build a business to $1 billion revenue. And, they just bought the managed service business from the OEM guys. They're a US company anyway. They just bought that managed service and they're building and building and building towards, possibly a $2 billion valuation.
Right.
So it's incredible. Like they could be the most valuable ad network of all time. Obviously, barring Google's AdSense and GDN, obviously.
Well, I think SeedTag is a great example. You mentioned them. I did an in-depth interview with them on Marketecture TV, which if you're a subscriber, you can access. SeedTag, for those who aren't aware, is an ad network that's very focused on contextual and semantic meaning of web pages. So it's effectively a contextual ad network. Former Google folks founded it, doing very well based in Spain. Now, to an American, that would be insane. If I went out to Eric, I called Eric and said, "Hey, Eric, I want an investment. I'm creating a contextual ad network." What would you say, Eric?
Actually, wait, hold on. If it was Ari Paparo, the answer would not be no. But yeah, I mean, typically, that pitch would, in 2023, typically get some pushback. But I've changed my mind a little bit on these managed service models, partly because of what Ciarán said in that, if you reach a certain scale, these can be like incredibly successful businesses and successful outcomes. But ad networks aren't getting the early stage investment at this time.
I really think the difference is on the customer side, because if you had a contextual ad network in the US and you called up your agency friends and said, "Give me an IO, it's great," they would say no too. They would say, "No, I have the trade desk. I have a team. We know what we're doing. We use data from third parties." In Europe, because it's a smaller market, you may have an agency in a country like Italy that is pretty short-staffed, that has to cover a lot of different, campaigns and campaign types, and they may be very welcoming of that pitch. Like, it sounds great.
Yeah, but there's a lot of managed service money in the US as well. I mean, there's massive ad networks. So, like the IO, I think people want to kind of sweep this type of thing under the carpet. But if anything, the IO is stronger than ever, right? If you hit a fragmented market like we're hitting now, the idea of like an ad network, it's like retail media, for instance, right? I don't think it's going to be the programmatic sort of nirvana everything is going to be. I think you're going to have basically the likes of Walmart already has a walled garden, and Sainsbury's and Tesco are going to be walled gardens. But sort of the second tier load, that'll be aggregated by ad networks and sold on a direct IO basis into agencies, because none of those want to have any data leakage. They'll not want their data out in the bid stream because that data is very valuable. So,
right.
I think that there's a huge upside in starting ad networks now. I know people would probably are getting sick in their mouths to listen to this, to me, some mad Irishman talk about ad networks when it is a problematic. But that's the fact. There is money to be made in it, and that's why we're investing in some managed service businesses.
I think there's opportunity also in building the picks and shovels that are going to power this next generation of ad networks and managed service businesses, which is something we're very interested in, because if Ciarán's right and that trend continues and catches fire, and you see large ones built around these next generation areas like retail and CTV, I think you can build great software and technology businesses to help power and complement them. So I think there's a wave here we're both riding.
We're getting sort of mid-tier managed service businesses coming to us and asking us to work with portfolio companies because they can enhance what they do. They can make more money. You're totally right. And I think that's a good thing. And that's sort of a byproduct of the fragmentation. So it's all upside, lads.
Yeah, I think our Marketecture contributor, Eric Seifert, has the phrase, everything's an ad network, which has gotten a lot of traction around these parts. But I will point out that it was a full 10 years ago that I wrote a very influential article called "Let 1,000 Ad Networks Bloom."
I remember that one.
Ad age, so you should.
I do too.
Good article, that one, Artie.
It was a good one. It was one of my best. All right. So now, while we're talking about Europe, we have to talk about this, what I would have to describe as bizarre news, that the European Union has, I'm going to read this, unconditionally allowed a joint venture of Deutsche Telekom, Orange, Telefonica, and Vodafone Group to effectively create their own ID using telecom data, using their IP addresses. And so presumably this is an ID that will be available to advertisers and publishers. A lot of the details have not been announced, but the main news being that they have an antitrust exemption to allow this joint venture to exist. The reason I preface this as bizarre, and I will accept my biases as an American, is like all the news out of Europe for the past several years has been privacy advocates slapping down Americans for doing anything with IDs, and this news appears to fly in its face and say that telecom companies, which are never known as being good guys in this whole thing, now have free reign, they can use their data, et cetera, et cetera. So, Ciarán, tell me why I'm wrong, and this is totally normal, good news.
I mean, I don't know what to make of myself, actually. I just we do a Mad Tech sketch thing on ExchangeWire every week, and I've actually sketched this out. It'll be on the site tomorrow, but just to give you the listeners an overview of what this is. Effectively, it's first party. So TrustPID works with publishers and advertisers that have with user targeting. And then under GDPR, you have to have users opt in. So you can opt in on the particular site. And then a random token is issued against that user, right, on the site. And then the publisher has fed that token, and then they can basically append specific data points. And then apparently, and I've just seen this yesterday, by the way, apparently TrustPID is now working with pre-bid, which enables that publisher to push that ID into the bid stream via an SSP into DSP. So they're already up and running with it already, right? Now, it is only first party. It's not cross-site targeting. So they won't be able to kind of merge an ID from the advertiser thing. So it's very much first party, and they're stressing this very heavily. The only problem I have with all this is the sort of like the opt-out is actually on the TrustPID site. It's not on the phone itself. So you actually have to physically go to the site and opt out if you opt in. I think there's a 30-day lifespan of the cookie, so it's not persistent. But there's a couple of things here which people need to think about. Can it scale? Will people opt into it, right? Will it pass the privacy advocate test, right? As I said at the top of the program, Johnny Ryan, Max Rem will be all over this. Like, it feels creepy, they think it's creepy, and all the rest of it. Then the platform privacy piece, which basically, if Apple or Google decide to launch a VPN as standard on a phone, it kind of kills this full stop. And the last one, which I think is most important, is telcos are crap at ad tech. Many telcos have tried and failed to build something in ad tech. So AT&T, Singtel lost $1 billion. Verizon, there was a company called Weave, which was basically leveraging O2 data in the UK to sell ads as an ad network. All failed. So while this might work, the execution might kill it in the end.
Right. So I'll just geek out a little bit, because what we know about this doesn't make sense. Let's just start there. So what they've said is, first of all, like you said, it's only on-site, first party, not third party, which immediately begs the question of, like, what value is it? We already can track. Publishers can already track first party pretty well. Then they said that it's basically a hashed IP address. They didn't use the word hashed. They said it was a random ID based on the IP address, which I'm going to assume means it's hashed. But if it's the IP address, then once again, why do we need this service? Any publisher can hash their IP address. The IP address is visible. And then what they don't say is that they're going to do anything to make this IP address, say, persistent across sessions, like, for example, on your phone and then on your laptop across device, or over time when IPs naturally, rotate. They didn't say that. So what they did say, in my opinion, has no value whatsoever. What they didn't say would immediately run afoul of lots of privacy regulations. So that's my hot take on this, which is the announcement is so empty of actual details that makes no sense.
Yeah, maybe it's a precursor to something bigger, that they're going to probably launch their own clean room. But as soon as they get into that, Ari, they're in the choppy waters of privacy. And, Europe is like, it's like, they're like piranhas, the advocates here.
It's true.
They will literally eat you alive. Like, they're already all over this. Johnny Ryan appears on the national television station in RT thinking he's a hero, like, the savior of mankind, because he's saving us from the cookie. So you've got guys like him who are motivated to bring this down. So I'm not sure how successful this will be.
Right. And the idea of appending additional data, because the telecoms obviously have a lot of data about the users, is interesting, but you would have to do it very carefully in some sort of privacy protected clean room. And once again, the more protections you have, the less useful it is. That's kind of a general rule.
I guess the sort of one thing is it is persistent. I don't know where it sits, but like it's a persistent ID. So maybe that's a sort of USP for this. But as you say, most publishers can do this kind of thing. To be honest with you, I'd rather they didn't do this, and we just kind of went ahead and doubled down on the likes of attention and sort of contextual and first party. I think that's the way to go. This just feels like more privacy hackery. We don't really need this, to be honest with you.
Yeah, I get your point. Another programming note, which is we interviewed Blockgraph, which is an interesting company here in the U.S. that effectively allows cable TV companies to share their unique IDs with advertisers in a clean room kind of environment. It has nothing to do with the blockchain, even though they are called Blockgraph. All right, so let's close this conversation out. I think it's a bizarre announcement. It is definitely enough to make a lot of probably American privacy people lose their minds because they've been, fined and abused and run through the ringer in Europe, and now this is being allowed to happen. But we'll see how it ends up.
This will fail.
Eric, do you have a prediction? Is this going to fail?
Yeah, this is going to fail. I think what Ciarán said earlier, which is the history of large telcos, well-intentioned trying to build ad networks, ad businesses, it's been 100% failure rate. And I think because there's some just inherent flaws with this whole thing, and it's a lot harder than it looks from the outside.
All right, let's do some news roundup. There's been a good amount of news this week in our world. Let's start with Uber. So it was reported that Uber had a $500 million run rate on ads, 315,000 advertisers, and is trying to get to $1 billion in ads by 2024. It's a very unique form of retail media in a sense. They had brought on, I can't remember his name, the head of Seismic to run it. Does anyone want to help me with the fellow's name?
The German lad.
Dr. Mark Greither?
Yeah, perfect. Thank you, Eric. You are the best producer we could ever have on the show.
Wait, that's my title?
You're doing double duty. You're filling in the notes, helping me out with the names. So are these? I mean, what's the hot take on this? Maybe Eric, you could go first.
Yeah, I think this is awesome. I mean, wow, a consumer app that has no content is a $500 million run rate advertising business, and they think this is going to double in a year and become $1 billion ad business. And it just got started. So I think number one, this is huge validation of the whole thesis behind, Eric S's, everything is an ad network. And if you've got scale, a relationship with the consumer and first party data and a great ability to produce an ad format, like, wow, you can build something big. So I think there's great validation there. I think this is just the beginning in terms of, perhaps rideshare, but just other of these, I think Ciarán's used the word utility publishers, starting to emerge and scale. And, it's just interesting because they're growing at such an accelerated rate, so much more accelerated than the sort of core ad tech market in terms of growth, that growth is coming from places. And I think that growth is coming from walled gardens who are losing signal. It's coming from perhaps like publishers and sort of open exchange. So I think this is fascinating and like super, super bullish on this trend.
One thing that I'm really interested in is they haven't provided this breakdown as far as I know, is how much of this is actually digital out-of-home advertising versus in-app. Because in many jurisdictions, they have the digital signage on top of the Ubers. I believe in New York they don't, only yellow cabs do. But in some jurisdictions, they have that ability to show those digital ads and have been experimenting in that area for many years. I would love to see some figures on how much of that is the growth versus recommending ads in the app while you're in the car.
My sense is it's in the app. Yeah, I think
it's in the app.
There's 300,000 advertisers, so that scale portends activity happening within the app.
This is a great trend for the industry. This is why I love fragmentation. This is why I'm bullish on the future of ad tech as well. Like Uber may not connect into the programmatic pipes, but they're going to use a lot of third-party ad tech to power some parts of this, which is really interesting. And I like the fact that they've kind of like tapped into a load of new advertisers on their platform. So, Deliveroo have something similar here, by the way. Like 70% of the people who use Uber Eats and Delivery, by the way, don't know what to order when they're on. Like, so there's a huge opportunity to serve ads in that sort of thing. I think most of the money at the minute is coming from the real-time in transit people. So if you're heading to Piccadilly Circus from here, for instance, you might get a bunch of ads from McDonald's or whatever saying like, come to Piccadilly, right, blah, blah. So this is great. Like, it takes away from, there'll be more of these businesses, and I do call them an exchange where utility publishers for years and years and years. It's almost like the advertising business is secondary to their main business, which I think is going to make them really good because from a user experience, because they're not trying to overpopulate with ads, because their primary business is getting you from A to B or getting food delivered to you, so it's very exciting. And I know some people bucket them into the commerce media space, but it's kind of like the next evolution of first party publishers, where the excitement is like, you can target these really rich audiences. You don't need to go to Facebook and Google, which makes my heart rise with joy that we're taking money out of their pocket, because none of those guys give us money for sponsorship. So I'm delighted to see Uber and other companies rise, and it's good for the industry as well, I think.
Yeah, I think the model of having a challenging, competitive business as your core, and then throwing some, very high margin advertising and sponsorship revenue on top is very attractive to lots of retailers. I know we're not calling them a retailer, but still it is attractive to a lot of retailers. And the whole thing is built around scale and consumer engagement. That Uber has both of those things at, high levels. So being able to suggest McDonald's or whatnot makes a ton of sense. And
intent, Ari, they've got plenty of intent. You know what I mean? Like these people are doing stuff that advertisers want to target, whether it's ordering food or going somewhere. It's super, super interesting for a buyer.
Right. I believe Lyft also announced something in this area about growing advertising revenue. But I don't have those numbers in front of me.
But this won't be the only one. The airlines, think about Ryanair, right? One of the biggest apps here in Europe. You could see if this model bears out, you can see other entities running these businesses, which makes it super interesting for ad tech as well.
Yeah, the airlines are interesting because the airlines have had quite a bit of cross-promotion revenue for years about hotels, obviously, and things like that. But it doesn't feel as though the engagement has been there, other than the credit card businesses. There actually was a report this week, I think in Semaphore, the new publication Semaphore, that showed that most of the U.S. airlines make more money on their credit cards than their flights at this point. Which was kind of fascinating. That's a little bit off topic. The other big news this week was the Trade Desk's earnings report, which is starting to become kind of like the Lollapalooza of ad tech, the happy day everyone's excited about. So they had another blowout report, 24% year-over-year growth, about $6 billion in media is now going through their pipes, which is a lot. I think they're clearly positioning themselves as the independent tech company in advertising, full stop advertising, not just programmatic, but, looking at the global advertising business in all screens and all media. So is there a takeaway here, or is it just, good execution?
Wow. Great execution. So TTD is up as a stock, 1,100%. in the past 5 years. So, kind of poking a giant hole in the idea that there can't be a successful standalone ad tech public company, nor can that company make money for investors. I think that's thing one. Thing two is, with a lot of folks being somewhat concerned about the macro, justifiably for 23, they confirmed their Q1 forecast. So I think that's interesting. Made a lot of positive comments around this year being transformational for TV, particularly obviously CTV and adoption of UID. And I think, it's, they're firing on all cylinders. And I think the other thing that's interesting is, again, it's, accelerated growth, right? Grew 24% in Q4, and competitors of theirs are not growing as fast. So again, I think it's interesting to see the share shift that's happening in real time, and hopefully the emergence of new independent leaders.
I've been very appreciative of their share price, and that I get invited to really nice parties in New York that are almost entirely funded by their share price. 1,100% increase. But the bear case on trade desk,
95% customer retention. 95%.
That's amazing. The bear case on Trade Desk has always been that they're a great company, great execution, but there was a limit to how fast they could ultimately grow because they were basically taking market share from second-tier DSPs. They had the organic growth, but at some point they're going to hit a wall where programmatic isn't big enough to support their market cap, and that they'd have to do something else to get there. But it doesn't appear to be the case. They keep running the same game plan. They really haven't changed the game plan much at all, and they keep showing the growth. Ciarán, what do you think? Do they run out of growth at some point?
I mean, Jeff Green is the greatest of all time. He is. He's the greatest ad tech CEO of all time. What a legend. Nothing but praise and admiration for Jeff. And he's able to talk to Wall Street that no other ad tech CEO has ever been able to do. But you're probably right. I mean, the CTV thing will probably... It will run out of steam at some stage, and they'll have to have a second act. And maybe that second act is commerce media, and maybe that's when they start buying some companies. I mean, there's a rumor on the street that Crypto is up for sale, and one of the suitors potentially could be the Trade Desk. So maybe there's an acquisition there, and they go full frontal into the commerce media space and basically build a narrative around that and build the business around that. So I wouldn't bet against Jeff. He's 2 or 3 moves ahead of the rest of the industry. So, they'll have something else lined up. But yeah, it's amazing the growth. Hey, I'd say Eric would have loved to be in a seat in a Trade Desk. I think we all would have been loved to be in a seat at Trade Desk.
Understatement of the decade. Thank you.
Yeah, absolutely. A few people have made a lot of money off that. It's the gift that keeps on giving for a lot of VCs. No names here.
I was at one of these parties at an undisclosed location in Manhattan, and my wife looked at me and said, "Why didn't you invest in the Trade Desk in the seed round?" And I thought that was kind of funny.
Yeah. Well, that's what I'm saying. You don't bet against Jeff these days. So you're right. They could run out of steam on the CTV. Not this year, but next year they're going to have to probably change the narrative. But Jeff is the master of talking to Wall Street. He's unbelievable. I mean, I watch him on CNBC and I'm blown away by how he's able to kind of weave that narrative so well.
Yeah, absolutely. Let's cover the last bit of news. This came out about last week, so it's a little old, but we didn't get a chance on the last week's pod to talk about it. EMX goes under and Yahoo SSP gets divested. I think the story here is twofold. One is the SSP business is very competitive and difficult, and an economic downturn makes it a lot less attractive. And the second thing I think is that, as we know from a lot of research from people like Jounce Media, the average publisher has 10 SSPs on their site. Losing 1 or 2 has literally no effect on them or on anybody else. So that's my hot take to start this out. What do you guys think? Is the SSP business a fundamentally unattractive business?
I think it's fundamentally unattractive. I just think that, your point that there's 10 or 12 SSPs on a given page, or working with a given publisher, why, right? If we look at it on the other side with the DSP, we just, talked about Trade Desk for 5-10 minutes, and, it's got 2 competitors, and it's a very much an or market. What one could expect that, if there's no real sustainable advantage for an SSP, it becomes commoditized, and this could be the year that we start to see real consolidation.
So there's a couple of things here. I think you're right about the SSP. Most of the SSPs here in Europe are just advertising for buy-side people, agency salespeople. And I think that's where the differentiation comes, demand from the agency groups. That's where you're getting differentiation, because a lot of it's very similar. The pipes are the same. I think that's where you'll see, it consolidated into a couple of big players. On the DSP side, you're right. We probably need another couple of DSPs spun up by the looks of it, because the Trade Desk is so new well. But Yahoo, for me, is interesting. I'm just recalling that Taboola acquisition. And I remember I wrote about it on the FirstParty Capital newsletter, and I thought when they brought in Taboola, they were going to shutter Gemini, and I just said they're going to shutter the native business and potentially just not focus on one part of the business. And sure enough, I was right in that one. And Sarah Fisher wrote a piece about the lady from Axios, the media writer, contributor, and she was mentioning that, the plans for Yahoo or they want to focus on the three pillars, which is the email business, the sports business, and the finance business. And, they would probably bundle the DSP into the email business because of the first party signal there. And the finance business, they're looking probably to have like a sports betting piece. And then the finance business, they're going to have like a Robinhood thing. And then ultimately they're going to spin out the whole company. There'll be like 3 different companies, and Apollo have made their money and move on. So this is just a precursor, I think, to a wider breakup of the Yahoo brand. It's just as a sort of this wider theme on this one.
Sure. Who will get the exclamation point in the breakup?
How much do you think that's worth? Maybe what's his face might buy it again. The guy from Oath. What's his name? Armstrong.
Tim?
Yeah,
Tim
Timmy might buy the exclamation mark.
It's worth something. All right, this was a great conversation. Let's call it with that. Eric, Ciarán, thank you so much for being here.
It was a pleasure, and big fan of your work.
Appreciate it. Everyone should follow both Ciarán and ExchangeWire on Twitter.
Thank you for subscribing to Marketecture. New interviews are added every week at marketecture.tv and your favorite podcasting app.